down about 191 points on the Dow. But for the steel industry, they're loving this. That's the one sector that is up strongly today. The fact that the administration has its back, even though it's kicking others maybe in the back. We're looking at a good stock market. Nevertheless, for the month of May, one of the best months we've seen since going back to February. The read from market watcher Alan Nuckman. Alan, what is the fallout of this? It seems surprisingly, at least thus far, limited.
Yeah, we're seeing a muted market action, and I think we've seen a sentiment shift, a psychology shift. We've talked before. My father's a psychologist, so I'm allowed to analyze this. We've seen a change. Now we see a sell the rumor and buy the fact action. So you're seeing here, after this was announced here today, where it's going to be official, the market stabilized and bounced back. So we've seen this movie before. There are a lot of carve-outs and exemptions and so forth. So we'll see what actual damage is done. But a lot of times this has turned out to be bluster. And like you said, this has been the best May that we've seen in the S&P since 2009. And for the tech sector, this is the best May that we've had since 2005. And if you look, tech is still positive on the day right now.
We're still roughly flat on the year. Is that going to be the script on the year?
Well, I like the way the market action we've seen the last couple of weeks. I talk all the time about the price action. We've had these major sell-offs on Tuesdays, and we've seen the markets bounce back each and every time for the last 3 weeks. So you're seeing positive price action. We're up at the highest levels we've been since March. And in talking about tech once again, we're only 2.5% off the all-time forever highs in the NDX, which are the top tech stocks. And Microsoft just made some new highs. So I think there's a lot of positives to talk about, and this seems to be just the normal course of the markets, seeing something happen with policy proposal, and it's not having a huge impact on the actual market.
One of the things I've been noticing is the collapse in rates. The 10-year note now down to around 2.85%. That had gotten up to around 3.11%. Normally, we see that type of reaction as a temporary thing. People are skittish about what's going on in Europe and Italy and Spain, or they're looking at maybe a trade war, and then where's a safe place to put your cash. So I could see that playing out that way. But how long do you see this lasting, this attention to bonds, dollar-denominated assets?
Well, I think things got a little bit overdone. I think the rate hike was getting a little bit aggressive as far as what people projected for the future. Yes, we're going to raise rates, but not at an accelerated pace that the market may had priced in. So, yeah, we got above that 3% level. That was a very important psychological pivot. And then we got smacked back down. The dollar's still holding up, though. That's what's got my attention right now. But we did have a reversal so far this week in the euro currency. The euro currency made new multi-month lows, and we're now higher than we were last Friday. So if that holds, a bottom may be in place there, and maybe we've been done with this dollar strength. But, I think we've focused a little bit too granularly on the rates. We've seen things move. What'd you say? We were at 311. Now we're at 285. We got down to 277. That's still only a 0.25% movement in the last couple of months. And we've really honed in on what's happening. I think we're overanalyzing the situation. Rates will go up. There are no questions about that. It's just the matter of the pace. And I think it's going to be a long, drawn-out affair, more so than a straight-up move.
So as far as rates inevitably going up, is it your view that it'll be slower and at a pace, to your point, not quite what the markets envisioned as recently as a week ago?
Yeah, and I have often said that I always believe the market is right, more so than we are. And looking at the long term, if you look at the rates longer term out till 2019, 2020, 2021, they're not continuing to rise at the same pace that we've seen. So I think the market's got it right so far. Just like I believe that the market's got it right today about these tariffs. Again, it seems to be the barking dog, gets our attention, but then they realize it's not going to bite us.
Very good analogy, which would explain your father being a psychologist. Now, a lot of the dots are dotted and the T's crossed here. I understand you a lot better now.
Yeah, I like where we're going with things.
Right.
I think we've got a lot of positives, and we just saw the small cap segment continue to make new all-time highs almost every single day. So we're going to see some rotation of money. So keep an eye on the Dow, because the Dow's been lagging behind. It's only 30 stocks, but I think that's opportunity.
Someone's blocking. That's all I'm saying. Always good seeing you, my friend, Alan Nuckman. That figures just perfectly. It figures perfectly because he's very analytical and gets into the whole psychology of this.